Okay, good afternoon. Happy Friday, everybody. Welcome to another installment of our Futurecast Forum. We have assembled market luminaries for all of you to have an open conversation supported by a slide deck that will be presented to you afterwards. So we are not going to have to review all the words on all the graphs, but there's plenty more data coming to you. I always get more out of the conversations, including those that come from the audience. So without further ado, I'm Dean Jones. I'm your president and CEO of Realogics, Sotheby's International Realty. I'm just going to go down the right hand here. Have you guys introduce yourself, Kartik?
My name is Kartik Ram. I'm in private banking and I'm a real estate investor. I absolutely love this area and moved here from Toronto a few years ago. And I'm excited to be part of this conversation.
Yeah. Thanks, Kartik.
Yeah. Hey, Ofer Evnery. My background is computers, computer sciences, AI. Also was lucky to be a real estate investor and developer in the last 10 years in the area. So I have a unique perspective to look at both of these angles.
Eddie Chang, one of the founding members here at Sotheby's in Bellevue. I'm the former VP of Government Affairs for both Seattle King County Realtors as well as Washington Realtors, and currently the Federal Political Coordinator on behalf of the National Association to Representative Adam Smith.
So tariffs, taxes, and tensions. I can't remember a time when things have felt this sort of strained and possibly causing inaction, because it's hard to know which way to invest or what play to bet without all the other policies being aligned. As you know, we've got some pretty heavy taxes that'll be discussed in the state of Washington today in Olympia. So Eddie's going to share that with you. We've got ongoing tariffs and a lot of other tensions in Iran and the Middle East right now, which I know Kartik and also Ofer are going to share. And then another kind of tension as well, which is what's going on with artificial intelligence and this debate between GDP and joblessness, which I know Ofer is going to touch on. So we're just going to go ahead and jump in right away, starting off with some tariffs and what is going on with this world right now and our president of the United States, and what is MIGA exactly?
Sure. So, like many of us, I watch CNBC because I work in finance, and a brilliant journalist, Tim Seymour, came up with Make International Great Again. And it made a lot of sense to me, because what tariffs ended up doing, which is effectively duties, which we grew up around, in the parts I grew up in, is a tax on the supplier, but it ends up being a tax on the consumer. So people end up buying elsewhere and doing business with other parties. And what's happened this past 2 years is that the international stock market, international defense companies, suppliers, wholesalers have all boomed. And really, we have shrunk in general. So I really think in the spectrum of fear, greed, and uncertainty, tariffs equate to greed. And it's someone's greed. And it's mostly political posturing. But I truly believe that we as residents and consumers will start to finally feel it. There's a lag time before the other shoe drops. You feel it every now and then with hotel rates. I mean, the 200 is now 500, and you feel it every now and then when you book a cruise or things like that. But it's going to start hitting home in terms of consumer goods and the way we live. But the way around that is to innovate, right? I was an entrepreneur. I was a part of a fintech company that raised $5 billion from when I owned the domain name to when I exited. It was worth $10 or $18 billion at an IPO. And I decided to be a private investor, but not in startups. I thought I would invest in big market-moving phenomena. And so I was investing along with private equity firms. And I think real estate is one such thing. I think this is a very big inflection point because of tariffs in real estate, and I'll talk about that a little bit later.
Because you think real estate could be a good hedge too, right, for investment?
Well, so everyone talks about store of value. So I lived in Dubai, and gold is talked about a lot as store of value, and what is old is new again, silver, gold, etc. And what is new is frankly irrelevant, AI, Bitcoin, etc. So I really think real estate has always been a store store of value. I split my time in Jackson Hole, and I'm dressed the part, and I love it there because people are simple. They store their wealth in industrial themes and in real estate, and there's almost a barter system inside of that community of people just being good to each other, and I feel like that's the way we used to live, and I think tariffs are going to force countries back to like first principles, which is who are our trading partners, who do we trust, and who do we want to do business with. And really, unfortunately, we've ended up alienating, not we as us, but we as a country have ended up alienating a lot of our trusted advisors. And my goal as a person that advises significant families in very complex issues and very sensitive issues, I always tell people, don't fear anything, don't be trepidatious, but just be aware, be conscious, because you don't know what you don't know, right? In AI, you have to prompt the machine. So know what you're prompting from your advisors, from AI, and from all those around you, and then you'll get better answers.
And so as it relates on this theme of the stock market took a bit of a nosedive today, and it's something that you've cautioned me from overreacting to what's going to happen with Iran or tariffs or what's, the president going to say, the other night. But the stock market prices a lot of these things in, right? So
well, it's a forward-looking tool, right? So, I mean, the market is 3, 4, 5 months ahead. Oil prices, gold prices, silver, wars, volatility. So I'd say the stock market is a terrible barometer, but it's a great factor for wealth effect, right? If we feel successful, wealthy, endowed, we make different decisions than when we feel scarce. And so I really feel like we're going to go back into abundance. I'm an optimist. Economists are wrong a lot. I studied economics. Even a clock is right twice a day. So anyone can be negative a long time and be right every now and then. I believe in being permanently optimistic. So my bet is that we're going to make a huge comeback, both in the real estate drought and in general in the economy. And I feel like whether it's the last quarter of this year bleeding into next year or it begins a little bit sooner, I think we're going to be in good times. So the market today is irrelevant. Yeah.
So I have your slides coming up in a couple of lifestyle imagery. What did you want to speak to here? Because I'm already jealous of these people.
That's my boat. Yeah.
That's your boat. Okay.
So it's about being a legend, right? I mean, it's about doing something different. I've always thought of myself as almost like a luxury brand myself, like Rosewood Hotel. What does it mean to me? It means that the concierge listens and crafts experiences that I want and I value. So really, I think global wealth is about this kind of look at markets that provide them what they want, not necessarily the shiny objects, right? So there's a lot of disruption happening around kind of people moving to where they feel more comfortable, where they feel less discriminated, where they feel more understood, and frankly, where their wealth goes farther. And so that's generally the theme of this. You're going to get these slides later, but I'm going to get right into kind of like some structural shifts in the market that I think are worth talking about. So Henley and Partners is this second citizenship firm. So if I have a couple citizenships, I'm sure so does Dean and many of us. And Henley is one of the kind of leaders in that kind of conversation. And it seems that the U.S. is still the king of the hill. Everyone still wants us. Our dollar is weak now, but that makes us even more attractive. So as an American, I'm here to say that I think we're still in the most significant wealth effect in the world. Everyone I know, frankly, whether they're a tech worker, an immigrant, a founder, are doing better than most other people elsewhere in the world. And everyone looks at us as kind of like the best practice leaders. So my bet is that the U.S. is going to get stronger. There's cities within the U.S. that kind of, during COVID, a lot of people... Interesting perspective. I appreciate the compliment. During COVID, a lot of people kind of fragmented and moved to places like Jackson Hole and Boise and other places. I feel like that's kind of coming in, not just because of return to work. I mean, my bank requires 5 days in, and I still play hooky a lot. But there's certain cities in the world that are not only money centers, but they're also where people want to live culturally. Restaurants, right? Hotels, places, for entertainment, choices for their family, for their dogs. And that's what you're really seeing, is that expensive places continue to get more expensive. And the places that were kind of on the border, the bottom's falling off, like Boise. I mean, I don't know, like there's a lot of places that everyone said is going to be the next Silicon Valley, and it's not happening, right? So I continue to see concentrations of wealth in the money centers.
And you were saying the super prime market was on sale for these last couple of years, and so you're already seeing those bounce back in some primary markets. And where do you think we are in that recovery here locally?
Well, it's almost the opposite of a bounce. So I went to London Business School in central London, and it was 2010, and properties were cheap then, and I thought, great, I'll come back later when I have money. Well, now prices have gone back to 2013 lows, so you can buy super prime in Mayfair for the same price or better than 2013. A flat in Vancouver, Cole Harbour, sold at its 2013 price.
That's right.
And the dollar has gotten a lot weaker since. So I really think, and I always also say this, if I had bars of gold in 1988 and I bought a house or a ranch in Jackson Hole, the same amount of gold bars or less can buy that same ranch in Jackson Hole today. So if I just held on to my gold, my buying power hasn't changed an iota. So I really think it's all about figuring out what stores of value are. And being a real estate bull myself, I think though real estate mean reverts, this is the time to buy into the super prime. So because homes that are available for everyone to buy, people will buy and price up. But homes that are only available to the few always go on sale, and when they do, they don't last. So I think it's a very, very good time to engage, but it doesn't mean that the prices aren't going to go down further.
Right. Yeah, so the tariffs in luxury real estate, some key takeaways you'd like to share with the team here as we handle that T for tariffs?
Sure.
That we should be reflecting on, and what might be next with this, issue of whether they're legal or not, and what's the next move?
Well, again, that's complete noise, right? It's whether they're legal or not, the whole world understands duties and like customs declarations and things like that. There's a cost of doing business for everybody. So I would say for us as prosperous Pacific Northwestern dwellers, it's not going to affect us gravely, but it is going to affect certain sectors within real estate. I think construction and building supplies have gone up, notably. Rates have gone up, hourly wages for trades, right? No one's really talking about that. There's no tariff on that, but it's been a knock-on effect to everything costing more. And so there's almost this stealth tax and stealth tariff going on where things are getting smaller for me, shrinkflation, and things are getting costlier for me, and experiences are getting costlier for me. Again, what tariffs can tariff in an experience, right? A safari ride or something like that, why should it cost more? But it's because wages have gone up and labor has gone up. So I think that's really the challenge in new construction. And there's other challenges because people are kind of in this indecision. Do I sell? Do I refinance? Do I just stay? A lot of my Jackson Hole clients are petrified to leave because their cost basis is $300,000 and their home's worth $4.8 million. So what are you going to do, right? You have all this liquidity trapped in your house. So I think that indecision is causing more it's kind of causing more turmoil because tariffs essentially don't give you a clear direction. Whether they stay or whether they go, I feel like this year, 2026, is going to be the year that real estate turns around. The drought goes away. There's a real estate coach, and I was chatting with him the other day about how he advises people like Dean and realtors, and he basically said, listen, there's no question there are weeds, but we're going to get through them with weed killer. And the way that we're going to do that is data, right? AI, data, transparency, and wealthy investors going, you know what? Enough is enough. I'm going to make a bet and I'm going to do it. So I think most of this is white noise, but it does depress demand, and that's a buying opportunity. It's certainly not a selling opportunity.
So great key takeaways. Any specific questions from the audience thus far on the impact of tariffs? Thoughts, comments? We're going to jump into policies now in Olympia, and I wanted to introduce Bob. This is your moment, Bob. We met at the bar, and we had a great conversation, so maybe I'll just have you turn around and address the crowd. But you and Lisa have been here in the Bellevue metro area for quite a while, and you've been very successful at Microsoft, one of the originals. And you've got some thoughts about the direction of policymaking in Olympia, and I know Eddie's going to expound on these, but I just wanted to give you, from a personal perspective, what you've seen the run here in the Pacific Northwest and this potential inflection point that we're at today.
You bet. Thanks, Dean. So, why am I here? Well, my wife and I have a home in Medina Heights, overlooks Old Main here. And I did join Microsoft in the very early days, retired in 2021. Hell of a run. And I hear all the turmoil, and he happened to be walking by, and we started talking. And it turns out he and I, Dean and I, were looking at the same stuff online about the same little town, Boulder City, Colorado. In fact, I understand he's going to drop by and see it, Las Vegas area and so on. It's small world stuff. I was 5 years old. My dad had just gotten out of the military, of course, Second World War. And he thought the future was titanium, the space program ahead. And he ends up getting hired by a company called Titanium Metals Corporation. Big plant in Henderson, Nevada, which is today a upper end suburb of Las Vegas. And my sister and I, with my mom and dad, moved to their first house. It was a 2-bedroom. My sister and I shared it, obviously. Cinder block, air cooler on the roof, a planned city that the government had built for the people that were building the Holder Dam. Now, it's a sweet spot today for safe, beautiful places to retire and a state with still no income tax. And somehow we were just chatting about all this, and he said, hey, why don't you come to this place? It's basically, we have a wonderful home with a wonderful kitchen, but we don't use it anymore. We basically come down here on Old Main somewhere. My wife's upstairs in a little condo that we rent at Main Place, where I'm doing my 3rd book on what I think I've learned in life since I'm now 80 plus, which is quite a bit to swallow. But a hell of a run. And it's interesting for me to watch what the current generation's going through, as if it was all brand new and horrible. When we got out of college, it was something called Vietnam. And I went in, happily not in the weeds somewhere in Vietnam, but living in Europe for 5-6 years got me excited about doing business in the international world. After several years in a consulting business, partner in a firm, I'm down here in Seattle. And I get this random phone call about this little PC company. I'll never forget when I call my mom and my dad and my father-in-law, all still alive, and I told them what I was going to do, and I was fortunate enough to still have a partner in life, my wife, who said she'd go anywhere. No excuses, no just hanging by, I'll trust you, let's go. And so my dad's first question was, why are you doing this? And what the hell is a PC company? My father-in-law asked the same question, and I had married his favorite child. I know you love them all equally, but he had a favorite, and that's the one I got. In fact, walking down the aisle in the church we were born in, I noticed that he was talking to her as he was walking her down to give her way to me. And I asked her, what'd you talk about? And she said, basically, he said, if you want out of this, I'll back you up. It's your call, but we went ahead with it anyway. And she's still there, upstairs in this condo in Main Place. It's a hell of a deal, by the way. Very good value for sitting right on Main. And our current house, we could probably shut the kitchen down because we basically eat here on Old Main.
Or I could celebrate that.
And and so he asked me to get a comment from a buyer. I did major in economics, certainly have invested some money in life, but I'm not a realtor, never have been. Not an investment geyser at all. But I hear all the horrible stuff that the current generation is facing, and you as realtors are confronting, and the people that you want to deal with. A great brand, Sotheby's, right? Higher end stuff. intelligent people you're dealing with. So what's going on? And I agree with a lot of the comments that I just listened to. And you know what? Nothing's changed. You poor things, young things today, well, I gotta live at home because I can't afford to live anywhere but down the hallway from mom and dad. That's a concept I do not understand because the jobs are so tough and it's so expensive, and what are we gonna do? I don't know. We got out of the military, there was something, we were in Texas, something called an oil crisis in Texas. You lined up for fuel. You know what the average interest rate was on a home loan then that we paid? 14%. 14%. You poor folks. I just read actually that the interest rate now has dropped to about 5%. And that may not be an issue to most of your buyers since they're paying cash anyway, but it's relative to how the success of that interest is going to go. But so how do you survive in this kind of environment from the buyer's perspective here? Well, first of all, it hasn't changed, right? The world's not going to blow up tomorrow. There are real challenges today. The tariff issue is certainly a challenging one. It's a different president of the United States, not totally faultless, but also some good ideas, frankly, that were overdue needing to happen. And so what do you think the opportunity is in the market you're selling into? You and I are living in a very unique place. Very unique. This is not equal to lots of other places around the United States, much less around the world. Who knows how long it will last? Right now, you don't want to be anywhere else.
And Bob, to summarize what we talked about and what Kartik was sharing about global wealth, why it wants to descend on this area, what it means to be competitive with other world-class cities, especially West Coast cities. You and I both had a past about the same time in San Francisco. I'm going to speak about San Francisco's unbelievable renaissance in 1 year because of policy and confidence. And AI. Well, so you came from Microsoft, and you're being very modest, but you've seen everything in the last 40 years that has happened in technology. And we're in a pretty unique spot, but it's changing today, isn't it?
I agree. And in fact, what's interesting about the San Francisco piece, it happened, I was with a firm called Arthur Young and Company, became Ernst & Young, big, what's called the Big Eight, consulting and accounting firm, a partner. And in San Francisco, and we loved it. I thought of staying there. I get this random phone call from the PC company, and up we went. We love that city, and we were regulars down there. Mandarin Oriental, walked down to the Embarcadero. Boulevard is an awesome restaurant right in the water. And Lisa and I would walk in the evening from that restaurant back to the hotel because it was safe. I felt comfortable. A year or two ago, we stopped. Totally stopped. It's unsafe, was unsafe. I've heard the words from the current mayor. Looks like there's a chance that's going to turn around. Maybe already has, and it's overdue. Right now, remember where we live here. We don't live in Seattle. I don't want Seattle to go away. I hope there are some policies certainly in place that change. And this effort on the income, so-called income tax, do you know how many times that's happened here? Just in my time here, 8 different times. We need a new income tax, to get the wealthy, blah, blah, blah. We'll see how it goes. The pushback's on already. That's why I was looking at Boulder City. You think the wealth here is going to put up with that at any scale? Do we got to sell all our houses? No. But it's relatively easy to move to a different location. And doesn't mean you're going to go away and never return, but that's a challenge you're going to have to face. And I think the other piece maybe that we were talking about, he thought might be relevant to you, is you as realtors. With a brand that's awesome, I don't know how many different Sotheby's have been around here. Across the street there's one. There's one up on Sound Isle where we just finished buying a home, by the way. And the cost of building a home is different than it was 5 or 10 years ago. And living on an island is different when you're 80 years old versus 40 years old. And maybe that'll be sold, we'll see. But it's a sweet spot and unique in the United States. People are still wanting to be here, but they're going to judge what this state decides to do.
And they're going to vote with their feet, Bob. And that's the thing, that the mobility that we're going to touch on. And thank you for sharing that personal story. And we'll see you in Nevada if you end up going there. And I'm going this weekend for that very reason. You might not have heard of Mini Medina. Yeah. Discovery Land, what they're doing, $20 million lots are selling well. They have a lot of Washington license plates at the Four Seasons private residences in Nevada. Las Vegas, you might have thought one thing, but it's tax friendly, right, Eddie? And it's now, in some people's minds, a world-class city for entertainment and cuisine and lifestyle. But it's the fact that people are living in more places now, which is good for our brand. But if Olympia doesn't watch out, they could cause capital flight. Eddie, I'm going to throw it to you now. And thank you, Eddie, for being a steward of our industry, both for the state and for King County as a former VP of Government Affairs. You spend some time in Olympia. What are those guys doing? Today's a big day for this millionaire's tax. And I've got your slides here, so off you go.
Well, let's go back over the past couple of years. The raison d'etre of the Democrats in the legislature right now, in the state legislature, is to try to make our tax base more progressive. I've been an advocate down there for a while, and I've always said making our tax rates more progressive, it involves making progressive taxes as well as taking away regressive ones. And just adding more taxes on top of our current tax load is more oppressive, not actually progressive. So a couple of years ago, they implemented the capital gains tax, which state capital gains, which I'm sure a lot of you are familiar with. That one got changed last year, and they added a tier to it. So if your capital gains income is less than $1 million, and it's 7%, but if it's over $1 million, it goes to 9.9%. So can we go to the next slide? As part of that, what they did last year was they also changed the estate tax. So this is how much money after the exemption you would have to pay. And you can see on the chart on the over $9 million, if prior to the 2025 change, it was 20%, which was already tied for highest in the nation. They changed that to 35%, which is a ridiculous amount that drove a lot of capital flight. This year, they are currently working on reversing it. So it will go back down to the 20%. So that's good for trying to retain some of the people, because fear of dying here was one of the biggest factors of capital flight. So my advice is don't die in the next couple months. Plan ahead. Or set up traps. Yeah. So if you go to the next slide, one of the things the good benefits of having this shift over and shift back is the state exemption level has increased from $2 million to $3 million. So, and that exemption level is not shifting back. So it's now $3 million. It's been pegged to inflation, so it will continue to rise over time rather than having to change. Earlier, you had mentioned the capital gains tax on a $40 million home and having to pay that much. That $250,000 exemption has not changed since 1997. Good Lord. And so that is one of the things that the realtors have been fighting on the national side, is trying to increase that and also peg it to inflation. So if we go to the next slide, this is the new millionaire's tax. It is, despite the myths, there is no ban on income tax in our state, in our state constitution.
Show of hands, how many people thought the Constitution said no income tax in Washington state?
There is no state ban on income tax. What there is there's called a, it's basically a tax. It says that the tax has to be, uniformity clause. Tax has to be uniform. It has to apply to everybody equally. So what this does is it's a 10% tax on everybody. However, everybody gets a $1 million exemption. So that's kind of how they're getting around the uniformity clause.
Seems a little targeted, doesn't it? And what's the fear that a lot of legislators have, and people that are in the real estate community have, is that once you fall in love with a $1 million threshold, what's the next move? 750, 500. Now it's for everybody. And so basically we have a bit of a spending problem, but this is right after adding excise tax. How well did that work, guys? Can you think of anyone that sold a high-profile Hunts Point mansion and instantly sold billions of dollars of stock after landing in Miami? Yeah, you know who. And there's other people like them, right, Bob? Mm-hmm. Yeah. So they are more mobile than you can imagine, and they are going to create a domicile in a tax-friendly state. Could be good news for us, but some people are concerned about a watershed of waterfront, for instance. I know of a listing that's getting launched immediately because they were ready last year, and they're worried about what comes out of the headlines today in King 5. So we haven't heard yet, have we?
About the meeting this morning?
Millionaires tax.
The millionaire tax this morning had a couple amendments that changed a couple things. They added diapers to the amount of exemptions. So one of the things that it is paying for is there's going to be no sales tax on personal hygiene products and diapers, and they're going to increase the small business B&O exemption from $150,000 to $300,000. Though the governor wants to push that to $1 million on the B&O small tax exemption, and things like that. There's going to be some give back on it, but not enough because most of the money's still.
But here's
going
why it matters, right, Eddie? So if it ends up on the ballot again to repeal it, did everyone remember the repeal attempt for the capital gains tax? How'd it go? Not good. Not good. So maybe we'll get someone talk about the repeal likely in November and why it might not be successful.
Okay. So the process of this is going to go through the legislature. At this point, I don't see any reason this bill will not go through the legislature and be signed by the governor. Up next, it will get referred to the state Supreme Court for a constitutionality test. The Supreme Court will look at it and determine whether the tax is constitutional or not. And given what they've done on the state. Given what they did on the capital gains tax, I assume that they will actually deem it constitutional. And then I know Brian Haywood is already putting together a ballot initiative in order to repeal this tax. So he's going to put together a ballot initiative. He needs 8% of the population to sign on to the initiative to get it on the ballot. I imagine it will be on the ballot. It's going to be a huge fight in November. I don't know if it will survive November or not.
But if it follows the logic of the capital gains tax, let's face it, the majority of we have more renters than homeowners in the city of Seattle, for one. Put that in perspective. There's more people likely wanting to see the rich pay a higher percentage of their wealth towards getting lower cost diapers and personal hygiene. You can see the trade that's going on in politics, right? So is there more likelihood that it'll get voted down? Probably.
If I were to wager on this, I would wager that it will survive the ballot initiative.
Meaning the income tax stays.
I think I would be willing to bet that the income tax stays.
So what percentage of your would-be sellers or your would-be buyers are going to be waiting for an outcome in November? Some people are making decisions today. That's the crazy thing. This is a little bit like we talked about the one big beautiful bill. It took a little while to get through, right?
Yeah.
And it was moving the goalposts around on investment. So where were you going to place your bet? What were you going to do? Is taxes going to change? What's happening with capital gains? Oh my gosh, oh my gosh. People freeze when they don't have certainty and confidence.
What that's caused is international buyers don't have to deal with this shit, right? So they're like, well, let Americans that are stuck in America deal with it, because what are we going to do, move out of the state if we don't like something? But somebody from Saudi looking at moving to LA, or someone from Brazil coming to Miami has a choice. And I just think this many-to-many world economy is blowing up. Canada is getting far more self-sufficient. Europe is back, right? I mean, it's a great place to visit. We all travel. I mean, the south of France is booming again. You know, these places were derelict a few years ago from lack of tourism. So I really think a lot of good is coming out of this, but us as Americans living in America have another thought coming.
So here's some of the nuances on the tax credits that are important for you when you're dealing with your client. If your client whose income is majority coming from stocks and bonds, as are a lot of our high-tech clients, the money that they pay into the state capital gains tax is a credit versus the money that they're paying to the millionaire's tax. So they're not getting double taxed on it. If they're paying B&O tax on that income as their own business, again, it would not be, you can credit the B&O tax, so you would not get double taxed on it. If it's a pass-through entity, you can elect to take the pay on the entity side, or you can pass it through and you can do it on the personal side. So it's not going to be a double taxation based upon based upon all the stocks you sell. You're not just going to be paying based upon what you just capital gains and as well as income tax, but only one or the other.
But importantly, for all those people locked into the $3.5 million base, your basis might be less than that, but it's probably worth millions and millions of dollars more. There's a big capital gain. Oh my gosh, what's going to happen when I sell this house?
So if we go, let's go to the next slide. Well, going back to migration, this is the migration over there. The next slide. This is a migration for out into Florida, Texas, Nevada, and what their top end tax rate is, and this is what is coming out of Washington. So we are losing population towards these low tax states.
And do you know why the Lone Star State was so aptly named? If you just invert the E and the A, it's taxes. No, it's Texas. That's why they're all going there. One of the fastest growing states is because of their progressive, very tax-friendly and booming industries. So no surprise.
The next slide should address your thing, which is the capital gains you on residential real estate transactions are not part of it. So if they sell a $3 million house, that $3 million is not classified as their income for the year. So they're not paying the 10% on basically any sale of a home. But that only applies to residential. It does not apply to commercial. Whereas a capital gains exemption does apply to commercial.
It's federal, but they don't pay state.
They don't pay state.
Yeah.
What it comes down to, though, and this is what I look at when I look at this with clients. You were talking about earlier about how investing in real estate is a good, safe market, and it is something you can hold and enjoy. If you're in Washington State and you take this income and you invest it in stocks and bonds, you're going to get taxed, and they're going to continue going after you on taxes. If your clients invest in real estate, they're exempt from that income from the sale of that property, which is going to be exempt from the capital gains as well as the millionaire's tax. And so there's an opportunity for clients to diverse out of stocks and bonds into real estate.
And so if you are going to maybe keep the waterfront home and buy a beautiful second home in Arizona that becomes a primary focus, how long do you have to stay there to have how do you make it your domicile, and how do you not make a mistake? That could be very expensive. Kartik?
No, I'll let you take that. But California's struggling with that, right? I mean, a lot of billionaires, it was retroactive to January. You can't move in the past. So they're really struggling with how they frame it. And these guys are predatory. Thankfully, I don't believe that our system is as predatory as the tri-state of New York or California, the Franchise Tax Board. But yeah, it's going to be really tricky. I mean, I count my days and hours, literally hours. I land at Alaska Airlines in Jackson Hole, start counting, and when I depart, because I don't trust this state one iota.
So you have a lovely home here, but you have an even more lovely home in Wyoming.
Yeah, 10x.
And there's a lot of people, 10x. And there's a lot. How does it changed in the last 15 years?
Well, it's changed for the better because there's more acceptance. I mean, it's an incredibly diverse place in terms of tourism, right? 4 million tourists, 10,000 residents, so 10,001. So, but the 4 million, a lot of them are trust tourists. They come in to set up their companies and trusts. So I take those very seriously because they come in for a task with a lawyer or a fiduciary, but they stay for the snow and the national parks and the lifestyle. And every 4-day trip has turned into 40 years. I've lost count. So my goal as a private wealth person, and I was a part of the First Republic Bank brand, which became JP Morgan. First Republic was started in Jackson Hole, and the chairman's office is where my office is now. He built it for himself. And it was just a place to with a fireplace to meet families and make them feel comfortable. And I really think it's about feeling comfortable where you live. It's less about the cost of ownership. My house there is free. I bought it for X, I'll sell it for X plus Y. So as long as I could afford X, it was free when I exit, right? And I got paid to live there. So in my mind, it's really very much about cost of admission in real estate.
And you've bought and sold with Sotheby's a few times.
Yeah.
And you've lived in lots of different places. And just the whole idea of a global citizen, think about that, and that you're going to go to tax-friendly places,
Yeah.
because if you play it right, you could have a free yacht here that's fully fueled and just spend 6 months and a few days in Arizona, and it works out. That's the way the lifestyle works, right? Because you can have multiple homes and have a better lifestyle by being very cautious about your tax burden. And when they're changing the game, that's where you're in this kind of friction zone right now. So I guess we'll wait to hear what comes out of Olympia this afternoon. But it sounds like, and according to AI, which we're going to get to in a second here, Ofer, there is a high probability that it's going through and it will not get repealed in November. So welcome to income tax state. I used to think it was the evergreen state because it was easier to make money and keep it, but now it's more expensive to live here than before, and with the taxation, we're following other left coast policies and becoming part of a capital flight that's driving new business to other markets like Idaho, like Texas, like Arizona, like Wyoming,
Like Monaco.
like maybe Monaco.
Yeah.
We have some folks here that have a place in the south of France for that reason.
Yeah.
So let's talk about capital flight. King County listing inventory trading above, or asking listings above $5 million. So you can see the spring and summer surge of listings. A lot of these are going to be waterfront. I have heard from a number of RSIR top performers last couple of weeks reporting dramatic increases in requests for BOVs, brokers' opinion of value, and also data. What is going on? This is where you guys become real estate advisors. And I see Owen in the crowd from UBS Wealth and Kartik. Your clients are probably asking the same question, like, what is happening? When do I sell my house? Should I sell my house? Well, here's what's actually happening. There's been a 24.3% increase in inventory above $5 million. That suggests you have 25 almost percent more people saying, I'm going to test the waters and see if I can get this house sold. But there's actually been 187.5% increase in pending sales. So this is some of that, liquidity that's happening. I think there's more confidence because the one big beautiful bill happened last year. A lot of listings tested the market last year, but didn't sell. And maybe they're going to try and reload this year. But I'm just showing you that there's already this suggestion that the 5 million and up market is increasing in terms of the volume. Okay, let's talk about briefly what's happening with some tensions in the military in Iran, and what might happen as it relates back to not so much tariffs, but oil prices. And I want to touch and come to you, Ofer, because you actually lived through the Gulf War in Israel. And this is like real stuff. We've been so preserved here in our little bubble of America, but this is real because I think Geneva went pretty poorly today. And, there's more news out there suggesting imminent strikes in Iran. And if they close the Strait of Hormuz, that's something like 20% of all oil shipping goes through that environment. And if we had a 20% increase in oil, what's happening to the states? What's happening to monetary easing? What's happening to our mortgage rates? I mean, this is just what ChatGPT had to say about it. They said mortgage rates are going to go back up. So a single decision tonight, when were we surprised before when something happened military? It happens, right? It's just something that I'm watching because that's why today is such a unique day in our industry. There is so much at risk, so much at stake, and the stock market, was reacting to it today as well. So do you have any thoughts about that? I mean, you lived, Ofer, through a military time in Israel. You were in the Middle East. Do you guys have any perspective amongst your colleagues, kind of what's the mindset right now with Iran?
Well, it's two different stories. There is the U.S., three, maybe more, but there is the United States perspective and then the Israeli perspective, which is, they're in the middle. They're involved. They've been, they did the first part of the war, right? And a few months ago, they took off the Iranian missiles, and basically the Israeli Air Force was flying completely with no distractions above Tehran for a few weeks, taking off whatever they wanted to with zero resistance. They completely dismantled the entire Iranian air defenses, and it was just a decision what to destroy and how. And the United States is there because there is deeper things happening behind the scenes and in the depth of the caves. And while Israel did a lot, when Israel went out, they started rebuilding everything again. So the question is, how do you handle it? But let's put politics aside and let's talk a little bit about the economical effects. From my experience, living through the Gulf War and being in a shelter with the gas masks for, 2 weeks and having my little brother, 3 months old in a plastic tent, all trying to seal it up with tape, not knowing how, you're going to end the night. But those events make people stronger. And every time a war happens, there's a crisis, but then it follows up with growth and success. So nobody likes war, but it's an opportunity for people to get together, remember again what they're fighting for. Are we fighting for freedom, for good? When we live in our own little lives, we're just like we're living for the next Costco run and for the parents coming over or the grandkids coming over. That's our focus. And suddenly it reminds us there are bigger things to tackle. So I think that in the short term, everything is going to be disrupted, especially for the people living there. Oil prices is going to get tougher, but production is going to get better after, because you need to replenish all of those munitions and all of those missiles, and it does great to the economy. So unfortunately, like everything, good and bad.
Well, and speaking of tension, there may not have been any other cities that received more press for the COVID era political disruption, security or insecurity than San Francisco, Portland, and Seattle. We got really poorly bruised, right? But there is hope. San Francisco has turned itself around in just 1 year with a new mayor and a lot of AI help. We were talking with Greg Lynn last night, and he was going to send a video, but I just recorded what he said and put it into ChatGPT and got a nice little meme. They have had 17 home sales over $15 million. They only had, and that was in 2025, they only had 8, so less than half of that the year before. He has sold more condo sales and co-ops over $8 million. He had 0 sales in 24. There's been a 25% spike in rent in San Francisco. That's the most anywhere in the United States. I can tell you that very large volumes of office space, because they had a big overhang, about 30%. We have more in Seattle, okay? There's more unleased office space in downtown Seattle, including sublet space, okay? And that's just what they're talking about publicly, than all of the Class A space in Bellevue combined. Now, that sounds like it's bad news, but what if I said it was a green shoot, a runway of opportunity to invite in the next AI-powered company with venture capital? We don't have as much AI or as much venture capital in our region as they do in the Bay Area, but I just wanted to serve that up to you and put it in context. Like, AI might have been the right thing at the right time for San Francisco. I don't think it would have happened without the policies and the economic stimulus of artificial intelligence. So with that, I'm going to jump into your slides and let me know how you want to walk along here.
All right. So AI, recently, I've been talking and listening to AI all day, every day, and like everyone here. But it seems like 99% of the talk out there is either hype, it's going to change everything, everything's going to be different, everybody's going to, or it's like doomsday scenarios. We're going to lose all our jobs, everything's going to be worse. And the fact is, it creates opportunities and it creates risks, like any new thing. And you have to look at AI as those two things: what opportunities it creates and what are the risks. It's probably not going to be all good or all bad like anything else in our history. And thinking about that, also in the real estate perspective, it can make you understand why the real estate market here in Washington could feel sluggish and weird, like try to sell a condo in Seattle now, or it could feel bullish and strong, like in specific places. right? So is it good or is it bad? So I'm here to tell you that it's not good and not bad. This Washington market is not confused. It was just split to two different markets. One market is powered by anxiety, fear, uncertainty. What's going to happen to my job? What's going to happen with AI? What's going to happen with an uncertainty changes your patterns of purchase, especially if it's a house. Another market is driven by opportunity, leverage. The AI created a new type of leverage. Suddenly, people or companies that can use AI, know how to use them, are extended by them, they can do more with less. They can get money from capital. Like all of the market gains you see is because a lot of money is flowing into AI companies, right? So basically you're seeing two markets. One market with people that know how to leverage or are lucky enough to leverage and have the opportunity. And the other is families or people that are concerned with what's going to happen. And when you have concern and when you have uncertain future, this is one of the main behavioral decision effects on buying or not buying a house, right? I'm not talking about a way to evade taxes or invest. I'm talking about the average person, buying a bigger house or moving in or buying versus renting. So if you have uncertainty, you have less people buying. So what we're seeing is two markets. One market led by people who have the leverage, have the money built around AI, and they have the confidence to invest now when the prices are low. And you can see them making very, very calculated decision, looking through the thread and getting good deals, right? There are a lot of people who are trying to sell and can't, and they're investing heavily. On the other hand, you see completely different market segments that are going into rental mode.
Yep. And we're actually investing in a property management company for that very reason, that we see the executive leasing, right, lovingly leasing a home, because they might not want to sell a home right now. They might want to wait a couple of years and see how this shakes out. But on the other hand, they don't need to live that life right now. They want to be conservative. So they're leasing an existing home without selling it, and then leasing something more modest. Why? Because like 10,000 people lost their jobs. And these are not insignificant jobs. You realize now the stat is Amazon's no longer the largest employer of Seattle. Okay, University of Washington is, which we'll come back to that because that's a good thing. But back to you, Ofer, in terms of these kind of the anxiety. One technology, two housing markets. You were just speaking to that.
Yeah, so we can move to the next slide.
Okay, AI makes top performers richer. That's not fair. It makes average performers nervous.
So, I think the similar analogy is stock market investing in stock versus options. And when you invest in a stock and it grew like 20%, you made 20%. But if you invested in an option and the stock went 20%, you may have earned like 200%. Or if it went like 5%, you could have lost all your money. It depends on. So this is leverage, right? And AI provides you operational leverage if you know how to use it. Like if you build a new business that can use AI instead of employees, or for a lot of its purposes, then you have leverage compared to another business, right? You can do the same thing with a lesser cost structure, and usually cost structure is something that is really, traditionally the same over the years, and suddenly someone is disrupting it, you get more leverage, you can do more. And other companies and other people who don't have access to this technology, don't know how to use it, they're like the one-to-one work production ratio. So we think that like in options, if the people who get leverage will be just able to make more money and use the opportunity very, very quickly. And if we move on, Sharon, yes, so Another thing to remember is that currently the stock market is growing. Everybody knows, stock market is cyclical, and whatever goes up goes down and gets corrections. It goes up in the long term. But now we're like in the, as Gartner calls it, the peak of expectations. People don't know what AI is going to do. Even the companies who are building it, right? They're not making money yet. Very few companies actually make money from AI, and not traditionally the AI companies. It's like the data centers who actually sell compute power, or Google who's making money anyway, and they're just pushing AI. But OpenAI, Claude, all those AI companies, all the companies that raise hundreds of billions and trillions of dollars and cause the stock market to rise so much, they're just not making any cent yet.
Ofer, is it possibly a bubble waiting, and how many unicorns can we actually have that are sustainable? Because I remember mylackey.com back in 1999, and I mean, what was the business model? You could hire someone to go and do something for next to nothing. There was no exit to it, but it had .com behind it, right, Bob? You remember those days? And there's the whole .bomb. It happened. I mean, is there potential here?
Can the panel talk a little bit louder? We can't hear.
Oh, come up here, Laura. If you'd like. There's a couple of seats up here if you guys would rather. Yeah. Yeah. So enunciate the idea that is there a bit of a bubble? There's been a lot of sensational, futuristic points of view reporting on this that caused some concern, right?
So, when you're looking at a bubble, there's several things I'm looking at. Is it a bubble altogether? No. Like the internet was not a bubble, right? Maybe most of the companies who were there in 1998, in 2000, maybe they're not here anymore, but the infrastructure is. Like everything that was built in those years is still being used by all of us. The fiber optic that was laid down all across America, those companies didn't make money, but now someone is making money. They bought it, they purchased it, you're using it. So I think it will be the same with AI. All the investment, everything that's being done, all the data centers are still going to be there. But are the companies currently involved going to be there? Probably not. Probably not all of them can make money. As you said, how many unicorns can you have? If you have 1,000 unicorns, they're not unicorns anymore, they're donkeys, right?
Well, to expand on like your question there, the question is in the .com we had a lot of basically vaporware companies.
Exactly.
And in AI, I see a lot of vaporware companies there now, and yeah, I do think that there will be some type of correction due to the vaporware that's out there. And how many vaporware AI companies do you see preferred in the market right now?
All of them. Not all of them. It's not that I don't trust what they're doing. It's just there are too many doing all the same thing. And this doesn't work this way, right? You have one Google. How many companies are traded and doing web search? Google. How many are doing operating systems? Microsoft, Apple. That's it. It gets into one or two. So we won't need all those 20 or 30. So will there be acquisitions? Yes. Will there be bankruptcies? Yes, for sure. It's just natural. And I think that if you look at those companies and the way they're located in the Puget Sound area, you can see their effect on the real estate market. But people are asking, how is it going to affect the real estate market in Washington? So it's not one Washington. It's not even one Bellevue. You can see the areas, specific areas in Bellevue where successful companies are. They have like a little islands of bubble around them. And the rest, no. Seattle the same. There are some good areas, but if you're selling today in Seattle and not the perfect product, good luck. Open houses are empty these days sometimes in some areas. And it's like the next neighborhood. So it's another example of how the gap widens between if you're in or if you're out. And you can be your neighbor in and you're out. And the difference is striking.
Well, and since I'm the purveyor of mirth here, I'll be optimistic and say I read an Apollo a global report recently about sporting teams and how that's become such a big business with Formula One, with our team selling soon, and so on, in the Olympics, the World Cup. So our sporting moment is this year, and I feel like Vancouver cashed in on it, Atlanta cashed in on it, many places have. Beijing has done a great job. And I feel like for us to lose that moment would be a travesty. So I say we keep our teams supported locally as much as possible. And we do a lot around this theme of experiences around sport. And I just think I think this is our time to understand luxury experiences and marry them to luxury real estate.
And I have a proxy for that that's going to wrap up in our presentation. And so thank you for bringing that up, because AI is definitely part of it, and we're blessed to have it. I mean, Ofer, is there any other place on the continent that AI is having as much impact other than Santa Clara and San Francisco Bay Area than here? I mean, we're number 2, aren't we?
Yes, I think Texas is competing. It's Elon Musk's hometown, and he just loves buying cities and renaming them after his company, like Starbase Texas. So we'll see like AI or Jarvis, Texas. I don't know.
Pulled down tens of thousands of square feet around the corner for his AI company. Why would he choose that here?
Yep, I think he just wants the local talent, people from Google, Microsoft, Amazon. The local companies, Amazon, Microsoft, I'm not talking about Google and Oracle that are not local, they have more than 50% of the world cloud market. So being here is like, opening a flight company, an airplane company next to Boeing, because engineers are going to come over. And I think, by the way, Elon Musk just signed an agreement with the government last week for him to provide AI to the government. And it's just like, why did the government sign with him? Isn't it fair that they sign with him and not with anybody else? So apparently, nobody else wanted. Why? Because the government insisted that the AI company who provides them the service remove all the guardrails. So they can ask the AI to, hey, can you help me develop this chemical weapon better? Oh, wow. And OpenAI and Anthropic, Claude guys, did not agree. And Elon Musk was like, sure.
I'll take it. Well, he still has his past, right, from being in the government. But I take some stock in the stock values. I mean, there's some job losses for sure, not happy for those individuals. But if you think about the incremental wealth that's benefiting from a higher GDP, a higher stock value, that is the wealth effect that we can't ignore. And I don't think we've ever seen this, have we, where we've had GDP increase, but joblessness, we are losing jobs potentially.
And I think my take to you as realtors today, if there is one thing, add another qualifying question in your mind. What's your confidence level with AI and with this world? Because I think according to people's confidence level, where they see themselves as part of this new world, it's going to affect a lot their decision points. Whether they're going to keep liquid, be safe, rent, or, yeah, I'm part of the new game. Let's get going.
So for I have a question. Here, why this is bullish for Seattle? You say that like east side submarkets near data center corridors and corporate campuses feel this more directly. Can you talk more on that? Like, are there any data centers pulling up here because of this thing?
The east side, the eastern Washington. I just told Dean that my dad asked me to invest some of his money in real estate and to get like a single family for rental. That's not my personal criteria, so I started looking at that. And Seattle and the east side are really, really tough for finding cash flowing property owners. Yeah. Even if you want to break even, it's not really easy. And we're looking now at East Washington, at the Tri-City area and Quincy area, in places where the existing data centers or upcoming data centers and power plants are coming to. And we see that the market, even today, you can get like for $450,000 a single family, 2,000 square feet in Quincy, and it will rent for $2,200. And even with the 6% interest at 6.5, it's kind of okay. And you're like, wow, are those animals, do those animals exist? So it does exist, and it was from like year 2000 and something, so it's a newer construction. And that's only the beginning.
Matthews fan goes out there, you can get a lot of money in Airbnb. So.
Oh, I didn't know that And this is just the beginning. So these are small cities. When you have a new data center coming, you have tens of thousands of jobs.
Washington has benefited a lot from Amazon's fulfillment centers.
Yeah.
I mean, that town was a nothing burger. And
Yeah, look what it did to Seattle. Like Seattle before Amazon was, you know.
And why Eastern Washington as a choice for large data centers, and how many jobs are they going to consume?
So the why is power. Those AI data centers, their power consumption is nothing that we've ever, heard before. Like it could be a consumption equivalent to the entire, King County for one factory, right? They're measuring it in hundreds of megawatts, or the big ones in gigawatts. It's like Back to the Future, stupid, right? And getting this amount of power needs a dedicated power source, because if it takes as much power as the entire county, it's not that like PSE is sitting with their, hey, can you use more power, please? No, they ask you to save power because they have flex events and they don't have enough power. So Eastern Washington is where we have our hydro plants. It means that we can get free power from the energy, the kinetic energy and gravitation of water. And this creates cheap energy source, clean energy source. And Microsoft, with the local, they're planning to extend the hydro plants in Eastern Washington and have the data centers close to them. Why close? Did any one of you pay the PSE an extension fee for 200 feet from a power plant to their new construction for like $100,000? So, and this is like for, one little cable. Imagine what's taking a gigawatt over several cities, counties, highways, bridges, lakes. It costs a fortune. So you want the data center as close as you want. By the way, Texas data centers, oil. We've seen some data centers randomly starting to be built next to an oil field. So until they hook it up and build the permanent power plant, they can at least have the oil and the generators close by.
So let's talk about a flywheel for a second, Ofer. This is where it gets exciting, right? So we have hundreds of, we have many thousands of very talented people that would eagerly work in a new startup. Venture capital looking for places to invest. We have millions of square feet of excess office space that can be Class A for pennies on the dollar. We have a talent pool here, unlike almost anywhere in the world. And now the number one employer is the University of Washington again, and pumping out very smart people from around the world, really. And I'm just trying to get back to this idea that our brand as Silicon Forest is just getting remade again, 20, 30 years after the internet boom, and it's happening all over again. And so is it more positive than negative in terms of the anxiety? Because it seems to me like there's going to be a lot of commerce and jobs in the Pacific Northwest.
So I don't think it's more or less, it's just two different audiences. It's going to split. And the gap is going to widen between those different segments, and it's going to be good for one segment and not for good for the other segment, unfortunately.
So the AI corridor is real and misleading for the broader region. Bellevue is no longer AI adjacent, and on the positive side, and then clustering and the rising tide. What do you want to speak to here on these slides?
So I think I mentioned it that the advantages are not to Washington as a whole, because we have, AI work. It's going to be very, very, very local. I don't think we're going to see high demand for, I don't think we're going to see spikes in real estate prices because people are coming here to work in an I, like we had in the Amazon round, where people were migrating to Seattle, and the entire Seattle was built because of Amazon, like in the last 20 years. Billions and billions and billions of restaurants. South Lake Union, how did it look before Amazon? Looked like a garage, right? A parking lot, and now it's a modern, downtown. So I think that next to the companies that are going to succeed, we're going to see success, and the rest is going to be kept in fear and uncertainty. So again, we're going to see more split and more divide.
And do you want to make some comments about renting versus ownership?
Yeah, I think Probably everybody here has a better feeling for that than me. But this is really trivial. We see now investment in a house. If before it was, hey, I've got to buy a house because I need the confidence, this is what my family should have. Now it's more of a strategic investment. Like if you have an investor mind, you'd buy a house, but staying liquid and not getting into a risky investment is on the top of the mind of a lot of the tech workers out there, which is a big part of our audience. So suddenly paying rent more than your mortgage is like, okay, because I'll pay 500 more, but I'm not sure I'm going to be able to afford my house if I get fired. So I better rent and keep the down payment. Maybe I have like $300,000-$400,000. I'll keep them liquid. Who knows what's going to happen?
Well, it's also a function of affordability. There was famously 45,000 multifamily housing units built within walking distance of our office in Belltown since 2005, okay, last 15 years. 45,000. Anyone want to guess what percentage of them were for sale versus rent? 7%. Almost all of it is rental. That's why the city of Seattle has more renters than they have homeowners. And so the next bastion of affordability would probably be another condominium. Are they building any more condominiums? No. Say no. No, it doesn't pencil. Is House Bill 1110 helping those affordable housing issues? Say no. It doesn't pencil because of MHA somewhat in the Seattle policies, but also the land residual is still too high to exit through a house to build a 4-pack in most locations. Maybe in the South Sound you'll see it first. So while we have policy, Eddie, that is finally catching up to the demand, it might be too late. And as you know, the Condominium Act is very punitive to developers, right? So they're not going to be on the hook for 4 years, and they only have 5% non-refundable deposits. It's too much risk. In most of the other mature markets where you see condo, you can take 10, 20, 30% non-refundable deposits and put that money to work in the capital stack, but not our developers here. So we'll see BOZA go forward. I don't think you'll see anything for 5 years in Seattle. And what you see is what you get for inventory, which actually, remember this, brings up a very good point about buying the dip. Buying the dip. Because if what happened in San Francisco happens in Seattle, and I believe we're likely to see this, you're going to look at real estate values that are going to skyrocket, because until the price of a new construction condominium will pay for that capital stack and that risk, it's going to have to go up about 50%, 50. Replacement costs for high rises, $1,500, $1,800 a square foot. Active selling prices, about $1,000 a square foot. So that means the entire resale market and all of your investment properties, which by the way rent very well, okay, in Seattle during FIFA coming up here, Super Bowl City, okay, watch that rising tide, but you're not going to see high-rise construction. So I don't know where people are going to live. So I think the tariffs are going to make real estate more expensive. Taxation is going to make it more expensive. So we can't get replacement housing unless you want to drive to affordability. But unlike Texas, whoever said Texas, it's a ring city. Throw down some dirt, drive another 20 minutes and you can buy a house. You can't do that here. I mean, Lori, you came up from the South Sound. I know you're a little late. We love seeing you. But it takes time to get up here, right? 40 minutes, 60 minutes, you never know. So I think policies with the Washington Condominium Act is an issue, but also the Growth Management Act is an issue.
Don't let me get started on a rant on the Growth Management Act. For the condo stuff, I'm on the state work group for condominium liability, and the focus so far right now, because we did have the big changes to the Condo Act, some changes to the Condo Act, but we're still waiting for basically case studies to allow insurance companies will come back in. We've been focused more so on the small condos, the low rise rather than the high rise. So we recently just had House Bill 2304 pass, which would allow for units that are 12 condo buildings that are 12 units or less, or four floors or less, including stacked flats, where the builders can go on a 210 warranty rather than a 1-1. So that'll hopefully reduce the cost of the low-rise condos.
Work retroactively or just for future projects?
it's basically for future projects.
But the smaller projects are less heady for the attorneys. They don't get as much contingent liability.
Yeah, well, I mean, 210s are a lot cheaper than 1-1 warranties. 1-1 warranties. But those are the small little projects are what we've been working on the condo side, and we are going to go back and tackle the big stuff. But this stuff on the legislature, it takes time to get these things through. I was a former real estate commissioner, and one of my big frustrations was it takes years to try to get through even the simplest things because of how many hurdles and how many rules you have to go through in order to get there.
And unfortunately, demand can rise much quicker than supply. And now as we lead us into the Bay Area, I spent many years there in the late 90s. I know, Bob, you did as well. Boy, what has that changed in the last year? As I said before, just go spend some time researching the state of San Francisco. It was sad, frankly. Beautiful city. Our global networking event will be there this October, and you're going to be very, very proud, because if you can see what we feel already, and if half of that comes to the Seattle area, it's going to benefit tremendously, and it's possible. In 1 year, it literally turned around, and a lot of it was AI driven. I'm not going to go through all these slides, but please comment along here, because beautiful city by the bay, right? Lifestyle, plenty of condos and apartments, very expensive. City is in California. That's a state income tax environment. But I know from talking to Greg Lynn and others that for the last couple of years, they could not sell real estate in downtown San Francisco because it was a falling knife mentality. There was no confidence in the future. A lot of that had to do with government policy, which is the mayor. But artificial intelligence firms helped the recovery. The lease commitments that you're going to learn about are substantial here. OpenAI took 800,000 square feet in Mission Bay in downtown. Anthropic, 250,000 square feet. Databricks, 150. Postman, 105. There's other companies that are following behind them. This is what it looks like in terms of office space expansion. And I know that sounds kind of old school to go to an office to work, but that's happening. Like, Bob, I guess Microsoft isn't going forward on their HQ expansion. They have 5 buildings waiting to go. Right? And that was after they left all of the other buildings in Seattle and Bellevue, trying to get everyone back to Redmond. And now I think they say, is it 3 days a week or 5 days? And Amazon's not far behind, and but that creates other tensions, which is, hey, I like living in Cle Elum and and not driving into work. But there is going to be a recycle of commercial real estate, and I think ultimately the infrastructure we have in San Francisco and Seattle and Bellevue, for that matter, is going to be well kept.
And forget AI, Boeing is making a comeback, right? If they add flights from Painfield, I think that's going to do wonders to real estate around it. That airport is underutilized, which is very rare for airports. There's no decent place to live around SeaTac, like for real, right? So like Painfield has amazing neighborhoods around it. I live in one on the water. And I just think if they made it more useful, we would just park and go anywhere we could go. And make it an international airport with customs. These are things they're working on. I spoke to, I think, Brett Smith about it, but it's just a matter of time. So I really, if I was to place a bet anywhere in the country, Reno, Vegas, blah, 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 Miami, Austin, I've lived in Austin, I would place a bet here, but not exactly Bellevue, right? Somewhere around here.
Well, and where was the injury maybe felt the greatest? And that's, again, what I see in downtown Seattle, making a correlation to the San Francisco. So their rent was the first to go up, fastest in the nation in San Francisco. Obviously, they've got other incentives, so they are actually converting office into residential. They've streamlined the permit counter. I mean, these are things that I think, as Greg Lynn, the broker, said to me that the current mayor always created a slipstream for the next mayor for the last 40 years in San Francisco. So this was the first time they really hit a major reset button and had really true change and then it just pivoted like overnight because of a policy. And it didn't take long for the city to snatch up all of its real estate. I mean, bidding wars, off markets. Rental stock is total run. People are talking about building new towers again. And a lot of it was because of the employment momentum behind AI, but there's also venture capital and, of course, the downstream economic effect of all that relocation coming back into a city. Foot traffic downtown is improved. We have similar data in Seattle, actually. Watch downtownseattle.com. The Seattle Association, Downtown Seattle Association, has great data on its recovery. Multifamily market fundamentals, vacancies have strengthened. Supply pipeline is extremely limited in the Bay Area as it is in Seattle. So remember I said earlier that demand can rise much quicker than supply. It takes 4 to 5 years to build a tower, but you can have a pivot in the market from a demand side in just a year. What does this mean for investors? Some great notes here. So basically we have a real rebound that's alive and well, okay? An hour and 45-minute flight south of here in a city that's very fundamentally similar to Seattle. And so I think what we've seen is the 19 through 22 was the expansion in peak, then the massive correction in 22 and 24, which wasn't helped by, some of the monetary policies and higher interest rates and a lack of confidence in the government, perhaps. And then stabilization and early recovery signals have already played out over the last year. And here's what the peak to trough recovery looks like as condominium prices downtown, which is a little bit more near and dear for you guys because it's commoditized. But the luxury real estate market has also taken off. This is what median pricing reset and stabilization looks like. Inventory. And really what I wanted to get you guys here to is downtown Seattle being at an inflection point. We have a commercial reset underway. We have relative residential resilience, and we have massive catalysts for awareness and global visibility that can pivot demand and perception faster than a pandemic did. I mean, I'm talking about a Super Bowl victory. I'm talking about FIFA. And while I'm lining up a slide, Kartik shared what happened in Qatar after FIFA came and went.
Sure, they called it their IPO moment. People discovered the country. It's not much to do there, but the sporting events bring people out, and then they fly the airline. And frankly, you become a destination by inverting experiences. You have to create the experience first. You can't just say one morning you're a destination. So they use that literally like a public underwriting, and they've done very well since then. I keep going back for an economic forum. I go to Davos and the Qatar Economic Forum, and I find that the Qatar one has more pull now, better speakers. And so, yeah, I mean, it's an experiment gone right. They own half of London. Their sovereign wealth is kind of the Switzerland of the Middle East. They stay out of turf wars. And I love it. I think any model that rivals Switzerland from a banking standpoint, from a privacy standpoint, is fabulous. And really, I mean, I regard them as the gold standard of urban experiments, and Vancouver being probably the shit show and the same.
Well, and let's go to Vancouver because can anyone remember an event in Vancouver in the last 40 years that put it on a global stage?
97 Olympics.
Well, 97, Olympics 2010, but go back further. 86 World Fair. It literally rang a bell and the world went, this is beautiful, right? And they did a good job with infrastructure, but it was in the beginning cycle of what was happening in the Pacific Rim. There was some fear about the 97, real fear about the 97 handover, Hong Kong back to China rule. And everyone was starting to make bets about where am I going to put my safety deposit box? And they wanted it in the form of real estate. And there was an incredible bounty of foreign direct investment. But it was the combination of the awareness because of Expo 86, the policies because of the residency program, and then, of course, the demand because there was nervous people. Started in Hong Kong and it spread throughout mainland China. And it happened for so many decades that they now have capital controls. And fast forward to today, they now have foreign buyer purchasing restrictions, and worse than that, they have speculation taxes, they have empty home taxes. I mean, but did it increase the cost of housing in the Lower Mainland in Vancouver? It absolutely did. Did the government intervention overly assert itself and create knee-jerk solutions like whack-a-mole? Yes. And did they completely freak out the market? Yes. And now, homes that were selling for $30 million are trying to get 17 or 18 million. And they've got a massive overhang of unsold condominiums that are all turning into apartments because the music stopped very, very quickly. That's, 2-hour drive north of here. So what am I saying? Policies, if not being careful, are hard to price into markets. And Vancouver had a great story that I think if we learn from it, we can actually come out of this year feeling some of what's happening in San Francisco and really a new trajectory forward. So here's what happened in Vancouver in terms of the peak pricing and the reset and potentially, oops, I'm going the wrong way here. In Vancouver, Expo 86, so I talked about that becoming a gateway city, triggering an awareness. We have had price escalation like you haven't seen anywhere in a major city. What do you think? Any other markets that have had that kind of growth?
I read somewhere that Whistler was the most appreciating city in the world. Yeah, yeah.
So that rising investor confidence. So what happens when people know there's global movement to a new market? It creates inertia and sort of a self-fulfilling prophecy about an inclining market, just like a negative reaction, perhaps the BP oil spill. Remember that? That was a self-fulfilling prophecy about a negative reaction. So confidence comes into play, which is kind of how we started our thesis here. So when things are not confident or clear, then people will either freeze or they go to one of those two directions. They see opportunity or they have panic, okay? But back to where we are right now, the flywheel in Vancouver as a framework absolutely could work for Seattle. Not running for any governor position here. This is just like logic as real estate agents. Look at the potential we have. We have immigration access is relatively possible here. We have like we have down in Vancouver, Expo 86, for us, it's the FIFA event, which is happening this June. Scarcity narrative. We already know what's the problems with building new housing and infrastructure. The city is still very livable, right? And we have a beautiful hotel infrastructure and a waterfront and convention centers and Payne Field and Boeing Field and obviously SeaTac International Airport. The infrastructure is there. We have the potential this year for an inflection point where price escalation comes back in. I think we've seen the inflection point. This is the floor, and we're starting to see more traffic and more sales downtown. And then, of course, the capital inflows. One thing I wanted to touch on, I don't know if it's too political, but like this notion of a golden visa, the Trump card, how likely do we think that that might happen? You guys familiar with this logic? So it's the idea of $5 million investment.
One.
I think it's five.
Five.
It's
Five.
But it's an idea that hasn't cleared through Congress and other opinion leaders, right?
I just think it's much more of a real estate development racket than it is a legitimate immigration mechanic. And so it's just noise. It's not going to cause any real estate.
Be noise. That's how these new companies are.
No, the effect it has on real estate is noise.
Okay.
It's not going to give us any benefit. Some people may get it and invest in a project, which will most likely go under kind of thing, you know? So EB5 was the same thing. It was a racket.
Yeah, well, EB5 was a racket.
Exactly.
We developed that racket right here locally.
Oh, 100%, yeah. No, and that's what I mean. It doesn't affect us as civilians and people. It's just something that plays in bubbles, and so it's noise. I call it noise. It's not, is it going to affect our day-to-day life like AI or a new TikTok hiring a bunch of people in Bellevue? No. I think there's just bigger shifts in the market than that.
Yep, I agree. And also, even if it did, there's so few people who can afford $5 million to just move in. Those same people could move here if they wanted anyway. You can open a company and then you get to. So I think it's more of the marketing around it than anything concrete.
I think it's a key way to keep talent in very mega type companies, but that's another issue.
But I think they could always do that if they wanted.
But it's easier to bring them in because they can clear those rails.
Allegedly, right?
A little bit. How many people do you get for $5 million?
Even if it's one, that's the best. We have an immigration issue here, and I'll get back to talk to Eddie about some of the things you're talking about. Brian Haywood, for example, has really shoveled through a lot of stuff to bring us here, and we're no better off than where we were when we started. And if you're familiar with this politics in Washington or in Seattle or Olympia, wherever it is, this initiative thing that he spoke about now may never be able to turn us around. Why don't you elaborate on that?
In terms of why I feel like the initiative will not pass in November.
Well, the fact that so many things are in place right now that we may not be able to bring to the table now and either disregard it or engage.
Well, I mean, like with it's a when it comes down to the initiatives, it's all about messaging, right? And the game has kind of changed when it comes to messaging. You used to not when you used to vote on these type of things, they didn't used to talk about what the money was paying for. And it's one of those things where now that's part of that's not part of the messaging of the capital gains tax. This is what it was paying for. It's paying for schools. You have a couple gold standards when it comes to initiatives and public votes, which is if it's generally if it's for police, fire, or the children, it's probably going to pass. And that's going to be one of the things that they're going to try to. That's going to be part of the conversation when it comes to this. Part of the money for 7% of the money coming in from the millionaire's tax is going to expand the workers family tax credit, which is basically money for low-income families. That is going to be a big focus on that, and that's what a lot of people are going to end up talking about. Our population as a whole has absolutely gone more progressive than we have been 20, 30 years ago. Bellevue has gotten a lot more blue than it has been in the past. Our entire landscape is shifting a lot. And if you look at the governor's election in 2024, Ferguson won pretty easily. And most people are voting along these lines. And I don't see my assumption that the reasoning for me that I feel the initiative will fail is because people are getting more progressive. People are going to vote along those lines. And I think the messaging is strong enough that it will continue to. I don't think that Haywood's initiative will basically create enough momentum behind to do it. Part of the problem is also Haywood's name has become very MAGA associated based upon the previous stuff. So it's one of those things where because he's involved, I think it also puts a little bit of a little damper on the possibility of the initiative being passed.
Well, how about the recent legislature just took several millions of dollars out of the firemen's and police fund to. We have to learn to live within our budget. We have to learn to manage some things. And for us to just talk about these things as, oh, they're a cycle, Dean, I think we have to be more realistic than that. I think we have to be very proactive. And I understand you're talking about international relationships and all those things. And granted, you've come here, or people come here to be part of something to move forward. And yet, look at what we have going on in this nation. The Medicaid fraud, and just substantial kinds of bleeding that we can't afford. We can't continue to do this. And accountability has to be great. And that's when accountability is great, that's when societies prosper. Okay.
And societies that are efficient, to your point, and don't have shrinkage or like a casino, if it was bleeding out, can't profit, right? The house doesn't win anymore. So it has to run a tight ship with cameras and machines. While Singapore, Monaco, Dubai, Doha, these are tight ships. They have tight immigration.
Strong legal.
No bribery, no shrinkage. Everyone is ethical and public transport shows up on time and everything matters, right? So I think the more efficient we get, Vancouver used to be efficient, right? Compared to Seattle.
I mean, their top employment is now government.
Yeah.
That's how you keep getting voted in.
There was so much to the year of efficiency. I mean, I believed in that narrative, and I still do. I think Washington should adopt a version of that. Like a Facebook turned around from $86 to $756 because Brad Gerstner sent a letter to Mark Zuckerberg saying, hey, you claim that this is your year of efficiency. Well, show it. And then boom, metaverse got shut down.
It could change very quickly, though. I mean, I'm not making a partisan comment here, but you have the potential. Just like Vancouver and all of Canada was in the industry of immigration, which they shot that foot now, right? But people want to be here. And look, it's spring has sprung out there. The sun is shining. We have an incredible bounty of lifestyle attributes and relative affordability from all the other West Coast gateway cities. And we have a very smart population with the University of Washington, and reasonably addressed taxation. This is why it's such a big thing right now, because are we going to shoot ourselves in the foot? And I just wonder, like, show of hands, how many of you, based on what you're hearing here and largely what was being said by Eddie with the policies, how many of you feel like there's going to be more people looking at making an exit before further attrition happens than not? Yeah, I mean, so
We're looking at business transitions right now, and business transitions to bring new members or move old members or families out of.
yeah,
And to sit down and try and look at those translation costs and SBA loans and valuations of real estate and gosh knows whatever. That's just a small part of the headwind they have, as well as bringing a family in to look at what our economic potential is going to be. Those are some serious issues.
yeah. Well, and the estate tax in Washington is a big one too. This is one of the most expensive places to die. So, yeah. So, and look at the silver tsunami and the inordinate amount of wealth that was sitting right in front of us right there. I mean, all of them have an estate plan figured out. What do you think, Kartik? But are they all going to stick around in Washington?
No.
They're probably going to sell their home and buy something somewhere else. Yeah. Florida looks pretty good. Arizona looks pretty good. Say again?
I've got two clients that are moving into the Henderson. You brought that up earlier. It's definitely coming into play.
I'm literally there tomorrow, and I'm in front of the Sotheby's office in Las Vegas to say, what is going on here? And they're like, look at all these driver's licenses. Look at all these people coming here.
When
Not
this happened
full-time.
in the UK, by the way, they instituted a tax in April, non-dom tax. So if you lived in the UK but were kind of using it as a tax dodge, they wanted to tax you as a UK person, even though you live somewhere else. So a lot of billionaires and millionaires moved to Dubai and Milan. So Dubai still tracks the highest, and then Milan, funny enough, because they have a flat tax. They charge you X amount and then you're off the hook. And so I think different business models is what puts cities on the map.
Well, yeah, but there's some political things that made that a great place, like the Abraham Accords, okay?
100%, yeah.
We look at this whole process, and we have to kind of come back to this accountability issue.
Yeah.
And I think we're really dropping that ball.
Yeah.
Well, and also, what message are you sending to the universe with all the press we're going to get, out of Olympia today? Mary?
Are any of you, do you have any thoughts around, are we going to start seeing climate change migration and migration due to insurance
Absolutely.
rates and premiums and policies? I would think that would make our northern states, and especially Washington, desirable for people who are leaving some of those areas. Do you guys have any thoughts on that?
Well, insurance rates are a problem here in Washington State as well. Less so for us here in King County. It is in the middle, like Clay Elum and other places like that, where there are a lot of homes that are not able to get insurance. Washington Realtors ran a webinar where talking about insurance, and the insurance commissioner had and the entire staff were all required to watch it. So the insurance problem is coming to Washington State. We're not seeing it so much in King County, but I do think that we will see some fallout from that as well. But yeah, I do have clients that are moving here from other parts of the country because our weather is nicer for the majority of the year than they are in others. And I have heard a lot of people moving to Nevada, as we had talked about previously, but I also know some people that have moved to Nevada and come back because they couldn't stand the weather down there.
Yeah. They'll probably have multiple homes, right? I mean, we joke Seattle's a great place to live and a good place to leave because the winters are tough.
Track your days also, unlike California, and so you have to, that's the other part of it.
100%.
Doesn't care if you're there. You complain you're 6 months, but they don't care.
Right.
Right.
So Nevada's an interesting one for that. So if you want to live internationally for 3 months and then live in Seattle for 3 months, you can do Nevada.
I think that's the thesis for you all with this brand, given global wealth, given the visibility that's taking place here with what could be a super cycle for Seattle. It's happened before, it could easily happen again. Knowing that we're so well connected into all these lifestyle locations, these destinations, sea, sand, snow, sun, surf, where do you want to go, right? I mean, how many passports do you have? And you're very, very sophisticated about where is your domicile, but we can all get around by traveling. And I don't think we need the same things that maybe we needed before.
To her point, right? There was the digital nomad during COVID, and now there's the tax nomad, right? Because we're not tourists anymore. We actually set up Nexus in one place, but live in two others, and we figure out with our accountants what's the smartest way to structure it.
Well, there's tons of ways to get around.
Tons of
taxes here and still live here.
Yeah.
I mean, there's, and our gift, you can gift a ton, right?
Mm-hmm.
So, and you can do your.
Well, you can only give 60% unless you're doing a QD through an IRA or those kinds of things.
Yeah, there's lots of trust you can do. Yeah.
Well,
Yeah. The digit, and you can give to your kids, but manage it, and, I mean, there's.
Yeah, but the trust tax starts out, unless you're passing it out or accumulating, those are real esoteric issues.
Which is why the big, beautiful bill was so problematic, because you kept moving the goalpost, like who was going to make a decision about capital gains tax. And I have to just say, politically, I mean, we're going to have midterm elections. What's the next 6 months going to look like? Any predictions? It's going to...
Sonny.
Go ahead.
I just want to make a quick note. I moved here from Austin almost 10 years ago, and there's a distinct difference between the property taxes that I pay here and there. Here it's 1%, there it was 2.6%.
Wow.
Your value can go up 20% every year as a homeowner, as a homestead. So when I moved into my property near downtown Austin, it was about $5,000 a year. 4 years later, I moved out and it was $12,000. So these are things that they're not telling you, just so.
My property tax in 2023 in Austin, and the Austin home was $77,000, and it's $7,300 here. So it's radical.
Crazy.
Yeah.
And then another
Same with
thing.
Florida, too. Florida's property taxes
Yeah.
are super high.
Yeah, and then homeowners insurance. Here is 10% of the cost that it was in Texas.
Literally
My
10%.
policy was $4,000 a year there because of all the windstorms. Here, it's like $600.
Ditto.
So there are things that are nuances that are not being sold, that are public knowledge. So just be aware that there's pros and cons, but it's not going to have to trade one thing for the other.
Let's talk about wealth generation as a couple final questions back to Ofer. I mean, you had some statistics about the $1 trillion valuations are happening pretty darn quickly. I mean, poor Bob had to wait, 3 decades to make his mint. But other folks are making them almost overnight. I mean, where is that all going, and where do you think that wealth wants to reside? Because we're not alone. I mean, California just imposed the billionaires tax. Have you watched this? And it's retroactive. So if you were living here in January, you're sorry.
Wasn't
and
me.
is Zuckerberg just moved over to Florida now? And I don't know that that's going to help him, but it's just kind of like people go, enough, and I'll come here and surf on the weekends, but my home is going to be somewhere else. But where do you think all that Santa Clara money wants to go, and like NVIDIA satellite offices and things like that?
That's a tough question. Most of the money that I see today going into AI is for data center and then for research and hiring people to all the gurus and so if you're in one of those positions, you're either an AI expert, then you can get 7-8 figures income yearly, and what you do with it, buy houses, boats, whatever, or you're a data center company and then you're making a lot of money from that, but you're also investing a lot of money in infrastructure. So I think we'll see a lot of spend on infrastructure. Like if you show me where the data center is, this is where in the next 5 years tons of money going to be spilled on construction and utilities and water and sewer and solar energy and cooling and this is why I believe that follow the data centers in the next few years, both investment-wise and geographically speaking, and you should see, nothing is sure, but I see is one of the safest bets, because whoever you are, Microsoft, Gemini, you still need the servers and the power. And these companies, they don't have all of it owned by them. All of these companies, they sign agreements with other companies to provide them with those data centers. Even OpenAI, they signed an agreement with Oracle to provide them with some of their data centers. So Oracle is investing in OpenAI, OpenAI paying them money to do the data center, and the stock market jumped like $1 billion, $1 trillion because they're worth more, but they didn't actually do anything. So.
Great. Any final questions?
Sorry. I had a question about your data centers that you were talking about. There was a mention in the State of the Union the other night that President Trump was talking about data centers having to be self-sufficient with their energy requirements, which does put a little bit of a twist on where those might be placed. If they're not able to use hydropower when that lease ends, is Quincy necessarily a great spot? What would be the replacement? Solar, what would be another?
Solar is just irrelevant. It's not enough even. So it's either nuclear, and Microsoft bought, what's the name of this island? They bought an island with an old government nuclear reactor that was decommissioned in the 70s, and they're now going to renovate it, studs out, remodel. And they're going to rebuild it because it can produce almost 1 gigawatt of power. So nuclear is going to come back. And oil. Texas is going to see a lot of data center because they could Elon Musk, I heard the interview, he said, in Texas, I can get a new power plant set up for me in 4 months.
To that point, within Washington State, maybe it's a policy question then, is nuclear and oil, given our politics, I would think would be highly unlikely to be approved in the state of Washington. So
this is why I'm looking only at Eastern Washington for
Gas is going to be a big play.
natural gas.
The legislature is looking at small modular nuclear, and that I think that's the play. That's probably the best bet in Washington State is small modular nuclear in terms of extra power sources. There is a limit on the amount of hydroelectric that we're going to be able to create. You also have issues with the breaching of the Snake River dams and stuff like that, which is going to remove some of the power sources. Personally, I believe small modular nuclear is the path forward on future clean power.
Yes, for Kartik, talking about rapidly increasing wealth, and you mentioned earlier precious metals, kind of touched on that very quickly. Yeah. So if you have a client that's heavily invested in precious metals, and they're hesitant to moving that to real estate because they feel that silver and gold primarily are going to outpace real estate significantly, what would you say about that?
Well, A, they're right, and B, I would ask them to double down, because there'll come a point where they'll get a deal they can't refuse. Like, when do we buy a home, right? A second home especially. It's either a place we're emotionally attached to or it's an offer we can't refuse. That will happen, and then they'll quickly go to Bellevue Coins and trade it in. But until then, this is the time to accumulate, because those are the smart money is on that. So you can't accumulate oil. Oil stocks go up, go down, depending upon OPEC and wars. But precious metals in general are mean reverting higher and higher. So I'm a giant raving bull. It's a funny story. So I grew up in Dubai, and I have a friend there. He has a refinery, not a mine. Mines are in Africa and other places. But he's got a refinery, which is a clean setup. In 18 minutes, it takes gold at 80%, at a 20% discount, and puts out beautiful, shiny bars, which the U.S. Mint buys from him, $5 billion a week at a time. So he sells $300 billion worth of gold to the U.S. Mint. So he flew over to Jackson Hole to hang out with me, and I was just chatting with him about the economics of it. And he's like, he doesn't get paid in cash anymore from the Mint or from anybody. He gets paid in gold. He's completely cashless. All his bounty is that. So I don't think it's a speculation anymore. I'm sure there's smart financial minds in this room. I'm not saying go all in on it. But for all the fools that went all in on Bitcoin and Ethereum and other things, if at that same exact juncture, from 2010 on, they'd gone in on gold, they would have made out, And so I think real estate is different, right? It's what we associate. Sure, you can use gold and you can use silver industrially, but you can use real estate in a different way. So it's really something you buy as a complete store of value, but less about a hedge and far less about a growth thing, because realtors make money, but I mean, us as buyers have to wait 5 years to make a lick on real estate typically.
But you can live in a waterfront home in Medina. You can't live in a gold bar.
True.
So I
You
want
can
to
live in Gold Bar.
Oh, good one. Good one. So my challenge to the audience, and it's okay to have opposing positions because honestly, you're the experts. How do you respond to this question? What the heck is going on in Olympia today, and how is that going to affect my would-be sell this year? Should I get out earlier, or shall I wait to see what happens in November? How are you guys answering that question?
I think it's what their financial goals are. I think people rushing to make decisions that they later regret because they don't think it through. So I think our job is to help them map that in whatever capacity we are. But we all know real estate's a great investment, whether it's commercial or residential. I don't care how much of it you have. The best way to maintain your real estate is have the cash behind it to maintain it.
100%.
Because otherwise it becomes devalued.
And Kartik, isn't there sort of a theory about shock reactions and those that jump in immediately, to sell off because they have a fear? What is that theory?
Well, I'm sure you track that as well, being a data person. But I really think this is a very good time to just tune out. I'd say 99% of stuff we read, even in the Journal and the Atlantic, is noise. Exactly. So what is that 1% you're going to be paying attention to? Her question was brilliant because I'm paying attention to gold and silver. I'm not buying every day, but I'm paying attention to it, and I never knock it because it's cultural, it's sovereign, and it's timely. Sovereign wealth, I mean, China is buying more gold than you can imagine because they're going to the gold standard. So that's all the big ivory tower stuff. But on the street, it's just a safe way to store cash. JP Morgan stores gold in our Zurich and New York vaults. And I'm telling you, we have so many requests for 25 kilo gold bars. I think that's 4.5 million. People are just buying those like AMC popcorn, and it's amazing how wealth comes out to play when you can offer people a true hedge versus talking about it. So you brought up another great point about if you have the cash to service your real estate and you're not relying on the real estate to generate its own alpha, i.e. cap rates, well, then you're fine and buy all the real estate in the world.
Everybody was a leverage to them anyway.
Exactly right. So I think that there's very few ways as residents that we can generate alpha. The stock market is not guaranteed. It can go down more than it goes up. There's very few things that really store value, hedge value, and grow value. And I think we've just circled on the 2 or 3 things. Trophy houses, fantastic dirt, and bullion, precious metals. Yeah.
Mona.
Sure, but it's very subjective. Yeah.
I think it's going to be very few people that actually are going to be moved by a tax to leave because they're embedded here. Their lives are embedded here.
Exactly.
Their kids, their family, their whole livelihood is embedded here. I think it would just have to be more of a catastrophic thing to think that somebody's just going to up and leave because of this tax.
Yeah.
Well, those people that are making $1 million or more a year or have some huge liquidity event where the capital gains tax comes into play, they probably own their home outright. They probably can afford to buy a second home. And maybe that's exactly what we're finding is just more people are buying second homes that are becoming a primary focus. So any surprise why I'm going to all those locations? I want to deliver to all of you once a month a tool that says, here's the tax climate, here's the lifestyle, here's what you can buy for 500, 750, 1 million, 5 million, 10 million. And here's how to get there. And here's who's doing it. And here's the trends. And which one do you want?
Why would they give up living here? Why would they leave their home when it's such a great place? We have so many benefits of living here. Why would they give it up?
I wouldn't either. Yep.
My 2 clients that I was talking about aren't selling.
Exactly.
They both have really nice homes here, and they're going to do the 6+1, and then
Yeah. 183 days. Yeah.
Even if you do the 6+1, you are still subject to there is a non-resident portion of the millionaire's tax. So even if they,
I'm talking about the other taxes, but
well,
You'd have to make over $1 million of income.
yeah, and that's
And
probably
make a proportional-
and $1 million that's not stock-based income.
Yeah.
Because you're already paying gains on
Right,
earnings.
so if you're retiring,
Well, but that's happening to most small businesses who are either S elections or LLCs, okay? So that all goes out on their invoice.
Yeah, well, you still get the deductions for campaigns, for your B&O taxes and stuff like that.
Yeah, the B&O tax, that's a whole nother issue.
Well-
That's a big struggling point for all of us.
No, I understand.
Yeah.
We're coming right up on 4 o'clock, so I want to thank everyone for being here. A round of applause for our guest speakers.